Good evening, and thank you for joining us on this urgent bulletin. We interrupt your regular programming with breaking financial news that has investors, expatriates, currency watchers, and markets across the globe sitting up and paying attention. We're talking about seismic developments concerning the Iraqi Dinar and the Vietnamese Dong, and mounting speculation about a possible trigger for a broader global currency reset. The buzz is growing louder. Is the long-anticipated realignment in global currencies finally unfolding? We'll walk through the latest facts, the implications, and the massive stakes involved. Don't step away. You're about to hear news that could impact trillions in foreign holdings and reshape economic expectations. We begin with the Iraqi Dinar, a currency that has, for years, drawn attention from fringe investing forums, hopeful speculators, and policymakers alike. Today, however, that chatter has taken on a new weight. Reports are emerging that Iraq's central bank has granted preliminary approval for a substantial redenomination of the dinar, effectively cutting zeros and altering the scale of the currency. We emphasize once again that this is preliminary and not yet final, but officials from Baghdad's monetary authorities have confirmed that study groups and advisory committees are underway, with timelines being discussed. If enacted, such redenomination could instantly elevate the value of outstanding notes, attract tremendous speculative flows, and dramatically alter purchasing power. Market watchers are treating this as more than talk. Currency exchange desks in major banks are quietly adjusting indicative quotes for IQD, and forward contracts are being priced with renewed interest. The air of urgency is palpable, and this is not the first time dinar speculation has emerged. But now, red flags of official intent and activity from the central bank add troubling legitimacy to the conversation. The question on everyone's lips: is this the beginning of a concerted realignment, or just another episode in a long-running narrative? Simultaneously, across Southeast Asia, whispers around the Vietnamese Dong have taken center stage. Unlike Iraq's situation, Vietnam is not discussing redenomination. Rather, authorities are reportedly exploring a gradual and managed revaluation of the VND. Economists inside Hanoi's finance ministry are said to be in consultation with the State Bank of Vietnam about adjusting the Dong's peg or managed float band upward. If confirmed, such a shift would mark a major departure from years of tight, export-centric currency policy and would instantly reverberate across trade flows and foreign reserves. Speculators have picked up on signals of reduced resistance to appreciation, and even modest moves higher have been enough to spark speculative positioning in futures, options, and regional currency swaps. Again, this is not yet policy. It is under discussion. But in the world of currency markets, anticipation alone can move mountains. Let's step back for a moment and consider what's happening in parallel elsewhere. Over the past several months, chatter has grown around the Global Currency Reset, or GCR. That term may sound dramatic, but it reflects mounting speculation among certain investor circles that central banks worldwide are preparing coordinated moves to realign exchange rates, reset debt dynamics, and recalibrate the relationship between reserves, gold, and fiat systems. The GCR remains a controversial concept, where a mix of fact, wishful thinking, and rumor swirl about a worldwide monetary reset tied to reserve currency reform. Until recently, most of the talk remained at the edges. But with dinar redenomination now under preliminary review and Vietnam's possible upward revaluation in play, those fringe discussions are gaining mainstream traction. Understand what's at stake. A redenomination of the Iraqi dinar could significantly alter the perceived value of vast stockpiles of dinars held by banks, institutional buyers, Gulf sovereigns, and yes, private investors globally. If even a small portion of those positions suddenly becomes worth multiples more than before, capital flows could surge back into Iraq, or flee depending on how confidence holds. Similarly, a managed appreciation of the Vietnamese Dong would transform trade margins, slow export competitiveness, and squeeze manufacturing that relies on cheap Dong pricing. That alone could shift global supply chains and price pressures across Southeast Asia. When viewed side by side, these twin developments, even if nascent, feed the idea that multiple emerging market currencies are being moved in concert or bad or good coincidence. Now consider timing. Central banks rarely move in isolation. Major players like the IMF, Bank for International Settlements, or even group of 20 meetings could accelerate or slow such moves. If officials in Baghdad or Hanoi are indeed laying the groundwork, it would make sense to see similar actions in other strategic economies, perhaps Egypt, Nigeria, Argentina, or Indonesia. Indeed, financial intelligence units globally are watching for unusual activity. Changes in forward pricing spreads, gold for fiat swaps, cross-border liquidity shifts. Investment bankers in Singapore, London, Dubai are reporting rising client inquiries about these currencies, with questions like, is this the start of something bigger? Or, can I move now to lock in value? So what does this mean for you, the viewer, the investor, the observer? First, caution is essential. These developments are preliminary. No official redenomination law has passed in Iraq. No decree has been issued by Vietnam's central bank. Yet markets dislike uncertainty and price it. Speculative positioning is underway. If you hold dinar or dong holdings, or are involved in funds or contracts tied to them, reassess risk, liquidity, counterparty exposure, forward roll costs, leverage, true tradability outside certain corridors. The rush to transact could trigger sharp moves in either direction, with significant losses if timed poorly. Second, the concept of a global currency reset cannot and should not be accepted uncritically. The term gets bandied about in forums alongside gold standard theories, debt jubilee ideas, and utopian scenarios. While central banks do engage in recalibrations, especially in the aftermath of crises or due to inflationary shocks, a coordinated global reset requires unprecedented collaboration, political will, and trust. That doesn't mean it won't happen, but it would still require public signaling, institution-level briefing, and likely explicit statements from major economies. So far, none have been issued, but the possibility is no longer in the realm of pure fantasy. Third, for broader markets, ripple effects are already being priced. Emerging markets' equities and bonds are reacting. Sovereign yields from Iraq to Vietnam to other frontier emerging markets are adjusting. Some regional currencies are showing early carry shifts in offshore trading. Brokers are reporting increased demand for gold, perhaps as a hedge. If the dinar strengthens or the dong appreciates, or even if the two appear correlated, risk-off sentiment may rise elsewhere or vice versa. We are continuing to monitor several key developments closely. In Iraq, we will watch for any formal announcement from the central bank, government decree, or legal referral to parliament regarding redenomination. Observers in Baghdad are expecting updates within weeks. In Hanoi, discussion papers or economic ministry briefings may leak. The pace of price action in dong markets may confirm or refute speculation. Elsewhere, we'll monitor for rumored shifts in other frontier markets and any coordinated language from groups like the BIS or IMF hinting at broader reform. In the meantime, investors should tread carefully. Open positions tied to Iraqi dinars or Vietnamese dong should be stress-tested. What if redenomination happens? What if appreciation moves reinforce further tightening? What if markets view this as a trial balloon? Diversification, liquidity controls, and scenario planning are essential. Hype can feed itself, but strategic patience pays dividends. On the big question, is the global currency reset starting now? Our reporting shows the answer is maybe, but likely not yet. What we're seeing are discrete, high-impact moves in select emerging currencies that could be precursors, teasers, or coincidences. We're seeing real financial flows, not just online rumor. But coordination across global monetary authorities? Not yet visible. Still, the magnitude of attention and positioning around these developments today makes it impossible to ignore the broader narrative. Something is shifting. Whether it becomes a carefully choreographed coda or a scattered overture remains to be seen. We're going to stay on this story, bringing you actionable analysis as it develops. If you're watching in the next few days, keep an eye on official pronouncements from Baghdad and Hanoi and any financial data around currency swaps and forwards. Market moves will be fast. Stay informed. Thank you for tuning in to this urgent financial bulletin. We'll be back with live updates as soon as new, confirmed information emerges. Stay alert. Markets are watching. The story is just beginning, and the stakes couldn't be higher.